Hello, today we are going to solve October 2024 paper question number 1 part C. We had earlier prepared profit and loss and other statement and statement of financial position. Now part C is related to capital and revenue expenditure. So let's solve this. So the first one is they are asking whether each of the following will become capital and revenue expenditure. You have to say, you have to think, if it is an expense in the business, it is going to be called as revenue expenditure. And if it is like an capital purchase of equipments or something and it becomes an asset, we are going to call it as capital expenditure if it is going to stay for a long time, okay, within the business. So if this revenue expenditure is one where expenses are going to recur every year, whereas capital expenditure is a one time spending and that asset is going to remain within the business for a longer than 1 year period. So now the purchase of electric battery charges. Now is this going to remain for a long year and I am going to spend only once? Okay, I'm not going to spend every year. So let's call this as capital expenditure. Okay, next, electricity for electric battery charges. This I have to pay every month on month and this expense is going to occur for every year, so it is a revenue expenditure. And then maintenance. Okay, I have to take the repair maintenance for this and have to do that for every year, so this also becomes my revenue expenditure. Okay, only the cost that's spent on the purchase of equipments or the assets is going to be called as capital expenditure. Even renovation, installation, okay, those are all going to be done only once in a year once, so that's part of capital expenditure. Calculate for Towne Car Parks the total revenue from the operating the 5 electric battery chargers for 1 year. So here he is saying that there was a okay, the owner of the Towne Car Park is considering installing 5 electric battery chargers to enable the owners to charge the batteries of their electric cars when they are parked in the car park. Quantity times the rate is always a selling price, or is always the revenue cost you are going to calculate. Now here it's not the number of items, here how many hours are open. So let's calculate. So actually he is planning to open, okay, total opening hours for the car park, okay, that's going to be equal to 100. Okay, it is nothing but 100 hours, 50 weeks per year. Okay, that's the thing. So that is equal to total number of hours is 5000 hours. Okay, that's opened in the entire year. And after that, but he says that he has estimated that 3 out of 5 electric battery chargers, it will be only occupied 80% of this total hour. So usage cost, usage hours are going to be, the first hour is going to be 3 out of the 5 is going to be occupied only for 80% of the 5000 hours. Sorry, this is 12,000 hours. So then 2 times 60% of 5000, this is going to be equal to 6000 hours. Now let's add up the total hours. Okay, total usage hours, that's going to be equal to 12,000 plus 6,000, so 18,000 hours is the hours of usage. Now we have to calculate revenue. Okay, revenue is equal to total usage hours times the selling price he is going to charge from the customers. So he is going to rate. Okay, so that is equal to 18,000 times 2.5. That value is going to be equal to 45,000. 2.5 is going to earn. Okay, so this is the total revenue is going to earn. Then the cost of operating the 5 electric battery chargers. So for this operation, we can see that there is a depreciation cost, installation cost, maintenance cost, okay, maintenance cost and electricity usage cost. So depreciation expense working here. So the depreciation for the this one. So let's calculate the cost of battery. Okay, the cost of 5 batteries installed. So the first one is going to be the purchase price, so which is 5,000 plus 900 is one time cost. It's a capital expenditure. Okay, so that is equal to 5,900. And how many batteries was what? 5 batteries. So the total cost was 29,500. Now let's calculate the depreciation cost. Cost is equal to 29,500 times 20 percentage, because he is depreciating as any other equipment, and equipments are depreciated at the rate of 20% per annum using the straight line method. So that is equal to times 20 percentage, that is 5,900. So that will be the depreciation cost. Okay, so let's write that. So the depreciation cost is 5,900. Then we have maintenance cost. This is a revenue expenditure. So for one electric battery it is 1,200. So for 5 electric battery we have to find. So maintenance charge is going to be is equal to 5 times 1,200. So that is equal to 6,000. Okay, so that will be the cost, 6,000. Then we have electricity. Okay, the electricity expense is a revenue expenditure. So 1.50, okay, when charging one battery. So 5 times, so it is 1.5 times the total usage hours is 18,000. We had calculated previously. Okay, the total usage hours was 18,000. So the cost of electricity for that usage is going to be 1.5 times 18,000, that is equal to 27,000. So 27,000. Now let's add up all the costs. Okay, so 5,900 plus 6,000 plus 27,000, that is equal to 38,900. Okay, so that is 38,900. This is the depreciation. Okay, so this is the cost of operating 5 batteries.